Hey guys, welcome back to a brand new video. I'm RexFinance, and today I'm going to be talking about a stock that I believe is over 700% undervalued currently. And better yet, this is a hyper-growth company, growing revenues at almost 200% year over year. So needless to say, if what I'm saying is true, this is a very exciting investment opportunity. But with all of that being said, I am not your financial advisor. I'm simply a 20-year-old kid speaking through a microphone to you guys watching this video on YouTube. These are simply my own thoughts, opinions, and ideas. It's up to you to come up with your own conclusions about this stock and company. But in today's video, I'll be walking you through my own thoughts, opinions, and ideas about this company as to why I believe this is over 700% undervalued currently. Without further ado, let's go ahead and get into this video. So if you follow my channel at all, you would know that about 4 months ago, I made a video on a company where I claimed that they were 734% undervalued. This is actually the same company, the same stock that I'm talking about today. Over the past 4 months, the undervaluement, if that's a word, of this company has not improved at all. This company is still well over 700% undervalued. And the stock we're talking about today is Shift Technologies, ticker symbol SFT. In this video, I will be explaining the different problem points that I see with Shift Technologies, reasons why they might be so undervalued currently, but I'll also be getting into whether I think the company's going to go bankrupt, or whether they're going to get bought out, or whether this is just a lucrative investment opportunity. So I hope you stick with me throughout the rest of this video. First of all, hit the like button if you enjoy this type of content. Second of all, if you guys are new here or returning and not yet subscribed, I would greatly appreciate hitting that subscribe button. And lastly, let me know down in the comment section how many shares of Shift Technologies you own. I know my viewer base here on YouTube is actually pretty heavily invested in this company. All right, so the first thing I should probably do is explain what this company is and what they do for those of you that are unfamiliar with this stock or this company. Basically, Shift Technologies is a direct competitor to Carvana, which hosts a marketplace for buying and selling used cars completely online. Right now, only about 1% of used car buying and selling takes place online, but industry experts actually expect that number to approach 30 to 50% over the years. So this industry in and of itself is actually expected to grow exponentially. It's not just the underlying company that I'm talking about here. There's going to be some favorable conditions within the industry bolstering the growth of this company. I'll get into more details later in this video, but Shift actually completed a recent acquisition that is likely placing them into the position of the Amazon of the used car buying and selling marketplace. Anyways, now without wasting any more time, let's just go ahead and get into the actual numbers. Anybody can claim a stock is over 700% undervalued without backing it up, but I'm actually going to back this up for you. Basically, with this spreadsheet here, I've taken the market cap of all of Shift Technologies' competitors, which include Carvana, Vroom, and CarLotz. I also included the forward sales numbers for each of these companies, and then I took the market cap and divided it by the forward sales numbers to come up with a valuation, which is where I get the fact that Shift Technologies right now is at least 728% undervalued. It sounds ridiculous even when I say it, but let's break this down for you. First of all, Carvana, the biggest company in this industry, is by far valued the highest out of any of the competitors in this industry. Their times forward sales valuation gives them a number of 1.5 essentially. Basically, their market cap is essentially 1.5 times larger than their forward sales numbers for fiscal year 2022. Moving down the list, Vroom, ticker symbol VRM, has a times forward sales multiple of just 0.1. Basically, their market cap is a tenth of what their forward sales number is for fiscal year 2022. However, during this video, I'm going to largely ignore Vroom because they have some company-specific issues that the rest of the companies on this list really aren't experiencing. If I'm not mistaken, Vroom's management team actually cut their forward guidance numbers quite significantly just recently, far below this 3.9 billion number that I have here on this spreadsheet. But that's all besides the point. We're just going to ignore Vroom for the sake of this video. Next is our company we're focusing on today. Shift Technologies, a $223 million company, expecting to do basically $1 billion in sales this year in 2022. Their times forward sales multiple is just 0.2. Their market cap is 20% of their sales numbers that they are projecting for the current year. That is insane. Now, I'll be getting into the different problem points with Shift Technologies, and there are certainly some things that might be causing this behavior in the marketplace. But lastly, just to cover it because it's on the sheet, CarLotz, the last competitor here, has a market cap of $178 million, and their forward sales number is about $322 million. So their times forward sales multiple is basically 0.55. But let's go ahead and focus in on Shift Technologies here and why I believe this is the best deal in this entire industry. So for starters, let me list out the problem points that this entire industry is facing. Whether that be Carvana, Shift Technologies, Vroom, or CarLotz even, this industry has razor-thin margins. This industry has no real path to profitability. No company in this industry has proven that this business model can work, and this business model will deliver profits to shareholders. That's kind of a major problem if you want to be investing into a company. Basically, you get your valuations of companies based off of the future earnings and profits they deliver to you as a shareholder. And if there's no foresight or evidence that a company in this industry can become profitable, as I already mentioned, that's kind of a problem point for investors. However, I will say that Carvana has reported profits in the past. And again, remember, Carvana is the biggest player in this industry. They have reported profits in the past, but they have not been able to sustain those profits consistently, which is the same exact problem that I've been talking about. However, if Carvana can deliver sustained profitability, that is going to help out all of these smaller players in this industry. Once Wall Street gets proof that you can be a profitable company in this industry, it's game on. Money's going to start flowing into all of the competitors in this space, and that's when I actually believe Shift Technologies is going to catch up in valuation to Carvana. The next big problem point that's kind of an industry-wide issue is actually the fact that used car prices have inflated dramatically over the past couple of years. Everybody knows it. It's hard to buy a used car right now at a good deal. Used car prices going up have helped these companies out tremendously over the past couple of years, bolstering their margin per unit sold, all of that good stuff. Think about it. If Carvana or Shift Technologies goes out and purchases a used car in the marketplace and puts that into inventory, and then that used car gains value while it's sitting in their inventory, that ultimately helps out their gross margin, their profits, and their profitability as a whole. But for these companies, the sunshine and rainbows is going to come to an end at some point. Used car prices simply cannot stay in the levels they are at right now. Used car prices are going to come back down eventually. And when that happens, the opposite phenomenon happens. Any used car that these companies have in inventory are more than likely going to lose value, which ultimately hurts their profitability and their gross margin per unit. So if you stack on the overall rough conditions in the stock market in general to these problem points that I've laid out for this industry, it's pretty easy to see why Shift Technology stock continues to be pummeled and pummeled and pummeled. However, I actually believe that this pummeling is going to come to an end in relatively short order, and let me explain to you why that is. There are a few things that Shift Technologies has done in particular that is really helping them bolster their margin and profitability as a whole. It all has to do with financing and protection plans on the vehicles they sell. That is pure profit if they can convert a customer into also purchasing their protection plan or signing them up for financing with any of their trusted partners. Both of those things stack margin on each individual unit sold, and the more customers they can convert to these different plans, either the financing or protection, is going to help their margin per unit, which helps their overall profitability as a company. Just a few moments ago, I shared with you how used car prices coming back down might hurt these companies. However, there's also another side to that story. This actually might benefit this industry as a whole if used car prices come back down. Think about it. Demand will likely pick back up as used car prices come back down, specifically for the e-commerce side of used car buying and selling. And it doesn't really matter how razor thin your margins are if you're pushing increasing volume through the door. If volume picks up, I believe this is going to be a very good thing for Shift Technologies. And according to website traffic, volume is picking up. Demand is picking up for Shift. Another concern from investors in Wall Street is the cash burn of these companies. However, they just look at the line item in the 10K or the 10Q and they really don't dive any deeper into what the cash burn is actually coming from. What the cash burn is coming from for Shift Technologies in particular is them expanding their inventory, going from, say, 2,000 vehicles in their inventory to 3,000 vehicles in their inventory. That is cash burn. And it's an important note to make that Shift is not going to be in expansion mode forever going into the future. Eventually, they're going to exit expansion mode, and their cash burn as a result of them expanding their inventory is going to level off, which is going to help their gross margins and their profitability. I'll just get it out of the way now, but I don't see it as very likely that Shift Technologies is going to go bankrupt unless we see a sustained recession in the economy, where demand really slows and demand really dries up. However, I really can't see that happening right now. Consumers are in great shape, the economy is really in great shape, and people are working, they're taking in paychecks. I don't see a sustained recession where demand dries up enough for Shift Technologies to get pushed into bankruptcy. But I do think since recession fears are pretty high right now, that is ultimately hurting the share price of Shift Technologies because it is a risky investment. Bankruptcy risk does exist here. It is a small company in an industry that hasn't been proven to be sustainably profitable. But as fears of a sustained recession or even a depression fade away, I believe that that's going to benefit Shift Technologies' share price, but it remains to be seen. Again, I'm not a financial advisor. Digging a little bit deeper into this bankruptcy conversation, there's also another reason that I feel Shift is not going to be entering bankruptcy anytime soon, and it all has to do with this acquisition that I mentioned really early on in this video, where Shift Technologies actually went out and acquired some technology from a different company, which is actually going to make them the Amazon of used car buying and selling online. Through this acquisition, Shift is really hoping to create a dealer marketplace where many different dealers can post their listings for their used cars that they have in inventory and hopefully sell them through Shift Technologies' new platform and marketplace that they hope to develop as a result of this acquisition. This is going to help Shift Technologies tremendously because through the acquisition, they're naturally adding inventory, and as they develop this marketplace and grow this online marketplace, they can start to skim profits from the dealers that post their listings on their marketplace, which again is going to bolster the profitability and margins of this company. Another advantage that they're going to see as a result of this acquisition is allowing financing of any vehicle that's sold on their platform to go through their partners, to go through their lending partners, which again allows them to skim some profits from the lenders. This entire deal is financed by Softbank with a 6% interest rate note payable quarterly with a 3-year maturity. Now, 6% is in the higher range generally, but when you consider that Shift Technologies has yet to deliver a profit, and there is no telling that this company is going to become profitable ever, a 6% interest rate on an unsecured note for Shift Technologies is actually not that bad. I would even go as far as saying as it is favorable, and it's actually kind of a bullish signal for us investors. If a company like Softbank is willing to invest this capital with that low of an interest rate respectively, ultimately Softbank is betting that they're going to return their investment, that this company is not going to become bankrupt, that they're going to get their money back from investing in Shift Technologies. This also adds some bullishness to me in regards to a potential buyout of Shift Technologies, in particular by Carvana. I think Carvana is the most likely company that would go out and purchase Shift Technologies just because they're the biggest in the space and they're the closest to delivering sustained profits to shareholders. If this marketplace succeeds and grows quickly, I think Carvana is going to be even more incentivized to make a move in regards to acquiring Shift Technologies, not only because of how undervalued they are currently, but because of the potential profits into the future that Shift Technologies might deliver to Carvana, especially if this marketplace is the best in the industry and Carvana doesn't want to develop their own. Heck, they'll just acquire Shift and make that become part of their business without them having to expense cash to develop their own marketplace. But with that, I'm going to end this video here. I still believe, obviously, that Shift Technologies is tremendously undervalued. I discussed some different tailwinds and headwinds of this industry, but also some company-specific events taking place. Things that are not helping the company any, but also things that we can look forward to as investors. Again, if you're new here or returning and not yet subscribed, I would greatly appreciate hitting that subscribe button down below. below. If you enjoy videos like this, let me know by hitting the like button down below. And don't forget to comment also if you're comfortable sharing how many shares of Shift Technologies you own individually. With that, have a great rest of your day. I'll be back with a brand new video later this week. Stay blessed and peace out.